We need to talk about the VIX. Based on Friday's price action, it was up at one point around 24% on the day. It closed, so you can see over here, 15.63%. Very rare for a daily move on the VIX like this. And not only that, if you look at the flow over here, this is exceptionally rare. To see the amount of prints that we saw in terms of just premium and how far out the money they are, as well as how close in expiration, you just don't see that based on flow at all. So somebody or a lot of people are hedging, or maybe are even making directional bets in the short term on volatility. But this is just insane to look at. Like you can see here, 5 million in premium for a 24 strike, 6.3 million in premium, 4.5 million in premium. So I'm going to look at some scenarios for this week that we can potentially see, because I do see a possible trade setup out of this, which I'll go into here in this video in a second. But going back over to the chart, we did have a key break over a couple critical trend lines, as well as just pivots. And I know some people are reluctant to use technical analysis on the VIX. Personally, I think it works fairly well. Of course, it's going to trade a bit different than an individual ticker, let's say, but you can still see common trends. For example, over here, right around the 20 level, it's a whole number. We've seen numerous rejections off of it on the daily. Rejection over here, rejection over here, rejection over here as of recent in early October. And just based on Friday, we also had a rejection. So we know that this is a key level. If we're able to get back over this, that can warrant more upside to around like 22, 23, which would be that next resistance. So going into it here though, we did have a break above my yellow trend line right over here, as well as my 1760 pivot. It's another key support / resistance level. You can see we've rejected it numerous times as of recent after retesting it. And we did break out above both of these on Friday, which also means that the weekly closed above it, which is rare to have a weekly close above this level, because you can see over here, we had numerous attempts on the weekly to break above. We even went as high as almost 21 2 weeks ago, but it was unable to close above. So it is interesting that we did close above last week, and that means that we have to expect heightened volatility going into this week as well. But the reason I have this yellow trend line, or the way that I got it, is I went all the way back to 2018 actually. You can see I connected this to a bunch of supports across time. Back over here, as you can see, 2019, over here in 2021, et cetera, et cetera. And this has acted as a crucial trend line that we broke down below as of recently, which is the first time that this trend line broke. This was an ascending trend line, so the fact that it broke down below typically means you're going to see more vol suppression, which is also likely what we're going to see heading into the end of the year, and I'll get into that in a second. But at the moment, we're basically just retesting it, and any breaks above, especially if it's a strong weekly close above, can warrant more volatility in the following week, potentially for the next 2 weeks. So until we get back below roughly 1760 to 18, which is the pivot to this trend line, this range over here, we're going to see heightened volatility. Your risk on signal would be a break back below here. As long as we stay above, we can still see, like I just said, that heightened volatility. We actually can see it go even higher if it wants to, which of course would have an inverse effect on the S&P 500. We could see some more downside on it. But again, the risk on signal would be breaking back below here. Now, personally, I'm actually looking to snipe some form of another entry for a long position if we do get it, just based on price action this week. Now, I do want to be careful based on Monday. Of course, it's very rare to have such a spike in volatility, especially at the end of the week. Typically, Fridays have experienced a lot of vol suppression lately, especially throughout this entire year of 2023. But if we do retest around this range, roughly 428-ish, right around this Fibonacci golden pocket, over here, as well as my blue trend line. This is the one that goes all the way back. I'll just show you here very quickly. It goes all the way back to the March low that we made, as well as the October 13th low from last year. If we do retest right around that 428-ish range, it's a viable long setup. Now, of course, you always have to look at risk, especially when volatility is heightened, because if we did reach down here early this week, I would expect the VIX to still be above that 1760 to 18 range that I just mentioned to you guys. So risk on that would be roughly a break below if we do have confirmation. Of course, I like to look more so on the hourly, but if we do have confirmation back roughly below 426-ish around this range, just because this was a previous consolidation zone, if we fall back within the consolidation zone, roughly from around here that we had a couple weeks ago, that would be bearish. That would be a fake breakout, and that would warrant new lows, likely to bottom somewhere around 415 to 417 in my opinion, but that's not my base case. My base case is we do see some form of a bounce around here, unless things really start to go to the downside this week, and that's why we saw a lot of hedging on Friday. But again, we'll know fairly soon. But at the moment, if we see price hanging around here, we have a retest of around 428-ish, then I will be looking for upside on that. That also fits fairly nicely with QQQ over here for a curl setup. We do have a key retest of a downward trend line line. So you can see from here, this is the trend line that started all the way back on July 19th before this correction began. And now we had a hard rejection off of it. And we're looking at a retest of, again, the previous consolidation zone, similar to the S&P 500. So we want to see, at least if you're bullish and you want to see a breakout of this downward trend line, we want to see price base around here. There can be wicks under on the daily if it wants, but you're going to want to see it hold up around roughly 363, 365 around this range in order to warrant a breakout eventually, ideally by end of month. And same thing with the S&P 500. If we're unable to hold around this range on the daily, then we're looking at more downside for those new lows. So again, I know it's theoretical where you're looking at two scenarios here, but from a risk perspective, just based on trading, even if I want to trade just based on an unbiased approach, just looking at risk reward solely and technicals, of course, then this is an amazing risk reward opportunity, whether it actually wants to bounce or not. I can manage my risk very tightly because I know, for example, like I just showed you on the S&P 500, if we do have a break below this blue trend line, so it's even closer risk in this case for the QQQ, if we do have a break below this trend line, more so on the daily, that's what I'd like to look at, then we would have more downside afterwards. But as long as the daily can hold above here, which of course can still allow wicks under, you can see price go to 362, for example, but get picked up by end of day. As long as that is the case and we're able to hold above here, then we're looking at more upside, which would likely be a breakout of this downward trend line if we're able to hold around here. So just keep that in mind. At the moment, it's a hard rejection on QQQ. So just like the S&P 500, I want to see how we open this week. If we have some form of an aggressive gap down for whatever reason, just because it's Opex week and we do have some data coming up here, then I'm going to hold off on that position. But if we can stay around this range, this is a viable entry in my opinion. And of course, the risk on signal, the best one in my opinion, would be a break below roughly 1760 to 18 on the VIX. Once you see that, that's your confirmation that we're likely going to see, if we haven't already, a breakout of this downward trend line, as well as a lot more upside on the S&P 500 to go back within the 440s. So just to summarize very quickly, we want to see this range hold this week. If it's unable to, and we have a quick break below, then we are looking at new lows before upside afterwards. My upside thesis into end of year doesn't change regardless on both of these scenarios. It's just a matter of where we bottom at this point, whether it's a higher high or a lower low. Regardless, I do expect that upside to remain intact into end of year, and especially quarter one of 2024. But the main area of interest is S&P 400 around 428 this week, as well as QQQ around roughly 363, 364. We're going to want to see both of these hold in order for there to be more upside. If they're unable to, we can, of course, see that lower low form, but at the moment, they are at a critical support zone. And last thing as well with the VIX, if we are to see it fall back below, which again, it's very rare to have such a strong close on Friday, so we could see some residue, especially early on this week, with some more upside, maybe a wick back above the high, since it was unable to do that on Friday. If that's to be the case, and we're in a high volatility environment, it's best to be patient. Be patient on this setup, let it come to you. No reason to force anything, even if we're in the range and volatility is still super high and we kind of wick back below. No reason to force anything. Wait for confirmation on the setup and then trade as you see fit. Other than that, though, I will see you guys in the next video.